Thanks for joining us. You're listening to the K-State Radio Network and Agriculture Today. Appreciate you being along. Well, normally we visit with our guest now on a Friday, but we've moved his appearance up one day for special programming coming tomorrow, and we'll be telling you about that more. But Dan O'Brien is going to talk grain markets with us, grain market economist, K-State Research and Extension, of course, from his office in Colby, Northwest Kansas. The centerpiece this time around, Dan, is this report coming up tomorrow, late in the morning on Friday. That is the USDA's monthly World Agricultural Supply and Demand Estimates report. Of course, these numbers are of quite great interest to the grain trades. Generally speaking, as the trades are looking ahead to those, what seems to be the source of conversation here?
Well, I think that the USDA generally in this report that comes out in the June report, they don't have any corn crop or soybean or grain sorghum crop surveys. So they're still relying on their estimates on the production side of either trend line yields or some adjustment now, but based on planting progress, et cetera, that may come about. So I don't know that we'll see a lot of change or have the potential for a lot of change on the production side. I think they'll probably stay with the acres numbers they had before, probably are not that anxious to change the yield. So that will stay in there. I think where the change could come would be on the supply demand balance sheets for corn and for sorghum and for soybeans on the usage side. Export numbers probably very likely to be adjusted. We've had good, strong exports for corn, for soybeans, very strong exports, or at least the what's bought ahead. We're in a little bit of a valley right now in terms of the export actual shipments because of what's available out of South America. But so it could be a tightening up of ending stocks for those crops that could come in an unexpected manner or a surprise manner in the WASDE reports for those two crops. Now for wheat, kind of a different critter. We came to the end of the wheat marketing year, ended May the 31st, and had generally a slow close in terms of the pace of exports. Now, in my own thinking, a lot of times I've expected, 70, 80 million bushel adjustments lower for the USDA numbers. And then by the time they reconcile all their books and bring in flour product exports, make adjustments, things end up being better than expected. But it does look like for wheat for the old crop marketing year that we could be lower. And when you look at the pre-report estimates for the 21-22 marketing year that'll come out in terms of what the USDA might do, they're looking at about at least a 15 to 20 million bushel decline so they're looking for that type of decline for soybeans anyway. For wheat, that the trade numbers are actually looking to the higher side. So for wheat, so I guess I would disagree with the general trade numbers in that I think we're going another direction. What probably does stand out most of all when you get in our notes that a person can see on this that we'll have on Ag Manager, that from year to year you have the expectation of wheat ending stocks to be down from 666. This is a trade estimate, 666 million for this current market for the old crop marketing year 21-22 that ended May 31st. They're bringing that down about 50 million bushels, down to 614. For corn, we are at 1.437 billion bushels, bringing that down basically 100 million bushels down to 1.34. For soybeans, still projected to go from 218 to 307. That's based solely just on higher acres and an estimate of what might happen in terms of the size of the crop. So got that. There will be some wheat production numbers that come out for all wheat. The USDA 2022-23 projection that came out of May was 1.729 billion bushels, and generally trade analysts thinking will be about 15-20 million bushels below that. For hard red winter wheat, again, it's our primary crop in Kansas. We have some soft red and white wheat around too, but anyway, so the hard red number projected to be down a bit also. So, and again, we're just on the cusp of that harvest starting. So what we get in June is still an expectation. What we'll get in July, we'll start to have all that much more of a solid set of numbers to go off of. So thought provoking on the world side. I always kind of struggle to piece together what countries are most impacted in all of this. We will be watching closely to see what the USDA does in the Ukraine corn and wheat balance sheet. It's not that they can't grow.
Very fluid.
Very fluid. It's not that they can't grow the crop, but these logistical issues really have not improved that much that we can make statements that the world's problem and shortage caused by Ukraine's absence is all solved. So I think we still have just logistics issues there. So we'll be watching those balance sheets, both the production and the supply and the usage side. I would also say you can see in these expectations how the dry conditions, Eric, that you and I have been talking about for a number of weeks down in Brazil for corn are showing up. Again, 114 million metric tons of corn production in Brazil, and they've been shooting for much higher than that in the past. Some dry conditions in Argentina affecting their crop as well. And again, along with the some weather forecasts that perhaps we have time to talk about in terms of La Nina possibilities. Along with that, in the U.S., they've had La Nina impacts down there, and that's hurt their corn crop in particular.
You bring it up right there, keeping it domestically for a moment, pertaining to the corn outlook. The market is ginning up some chatter now about, well, hot temperatures potentially right in the gut slot of the pollination period for corn here in the U.S. And that's getting some traction in the market, it sounds.
Yeah, it seems that at least out of a few of the major weather related crop production news sources that we look at, DTN being a primary one, we're having a lot of discussion now on the expectation that a high pressure ridge will set up in the U.S. and even with that, there are several contingencies of just how serious that might be, but that's supporting grain markets. Then typically when we've had major problems in the past, as our colleague and friend out of Iowa State, Elwin Taylor's talked about, you're at great risk in La Nina years. Well, we're in a La Nina year, and are concerned about one of these quote high pressure ridges setting up right during July, bringing hot weather during corn tasseling and pollination, and that's just holds a lot of risk for the corn market. It'd be a rough year to have that with the world generally tight on grain, et cetera. So if we got that situation started to affect that central corn belt all that much more, then the corn futures that we see now, again on Wednesday, June the 8th, with a close of 764 for July, 717 and 3/4 for December. Well, we'd see support for those numbers going higher, and I guess right now in this year, no surprise, and that would also affect the soybean numbers. And interesting how the soybean futures closed again on Wednesday at $17.40, and that's without a major drought in the U.S. So where do we go when we get a drought? Do we head closer to 18, 19 or higher? So just a lot of volatility and uncertainty in these markets, and I guess we'll see where things go from here.
And finishing out here in our visit today on wheat, once again, we're not there yet, but test cutting in southern Kansas is to commence here, weather permitting, in the next few days. As we look around Kansas selling points, should say, and glance at the wheat bids there, they're pretty firm, to say the least.
Well, yes, even with general malaise with regard to U.S. wheat exports, the overall world market situation is tight enough that we're seeing cash bids across the state, ranging from a low of 1087 in Northwest Kansas at Colby up to a high of about 1140, 1130 in Salina, Hutchinson, and Topeka, the more export-oriented, processor-oriented locations in the state. So, even in what we term to be a little bit lower of a glide into harvest, we're at $11. So it's just quite the situation. I'll be curious to see what Kansas farmers who hopefully get good yields where they expected and surprisingly good yields where they don't, what they're able to do and what their strategies will be. They'll see these prices. Do they? Well, a lot of them may go ahead and sell just to generate cash to pay off the higher price inflated input expenses that they've been dealing with for their other crops, for corn and soybeans and grain sorghum and sunflowers and cotton. So when that the cash flow needs may trump the I guess the idea of holding on to wheat and seeing just how higher it might go. So and when you look at new crop bids, again, you've got June now for a price, and you have a lot of times those bids are flat into June and July, as we see, and really once we get into July, we're shifting over to the next contract into the September contract instead of the July one to rely on, and basis is widening out because of that inverted market structure. So you asked me a straightforward question in wheat, and I'm kind of dancing around the issue. I think that it'd be natural to have some price weakness at this time, but if weakness takes us down to $10.50 or $11, still that's a tremendous thing. And it's kind of what our point of reference is for success in the wheat market. Is it if that reference point is where we were in the past? Well, we used to think $6 is a great price. So here we're at where we're at now, and there is probably expectation that with continued problems in the Black Sea region, that prices could shoot higher. So it'll be, I don't think it's necessarily a loss to go either way to sell cash now for wheat or to go later on. But I just would say that the future is murky in terms of where overall financial markets will go and how that will affect the commodities. That's the murky part. It's not, we know we're tight supply demand wise, but what will the financial markets do? And those have a lot of questions surrounding them.
No lack for dynamics in the markets, that's for certain. Dan, of course, puts together a collective series of notes on the markets on agmanager.info every week. They're now posted for this week at agmanager.info. We'll talk again. Dan, thank you. Appreciate your time.
Thanks, Eric. Take care.
Grain market economist Dan O'Brien, K-State Research and Extension, along with us each week to talk grain market trends here on Agriculture Today.